Welcome back, guys, to the weekly outlook. Hope you're enjoying the episodes. If you are, do me a big favor, please, and hit the like button, subscribe, and turn on notifications for my next video. So we're going to go over 10 pairs today. I'll give you the lineup. We have gold, Aussie dollar USD, USD CAD, pound JPY, pound Swiss franc, Aussie dollar New Zealand dollar, Swiss franc yen, euro pound, euro New Zealand dollar, and euro USD. So if you guys want to skip to any of these, the timeline will be underneath the video. Just click on the pair that you want to have a look at and it'll skip straight to it. So the first pair that we're looking at today is gold. We can see a beautiful downtrend forming on this market. Now, we had a strong push to the downside last week with gold coming into some very strong support areas around 1266.90. And we can see when price came to this level, we had a major bounce off of it. We closed Friday with a strong bullish candle to the upside. It'll be very interesting to see how gold can climb back up. Even with the Fed news, we see that the price has moved to the downside. Is this indication of price bouncing off of the support level, trying to tell us that we may start to see some push to the upside in a potential change of direction? Well, to be honest with you, if we're using price action at the moment, we're going to have to break through some serious resistance levels around here, which is 87.58. So what I'll be looking for next week on this pair is to see this continued bearish momentum. Now, it's pretty simple to say that we have a very strong support zone here. If price is able to break this level back to the downside, then potentially be looking for price to come back into some support areas for potential retest or a potential lower high structural formation forming before the continuation to the downside. Now, this is a daily time frame, so we're going to have to visualize this pair moving during the course of next week. And looking at the overall consensus of these candles, we're going to have to anticipate price doing quite a bit. So we need to see a candle close to the downside, a potential indecision on one day, at least another price action candle coming into this area here with a rejection wick. So we're talking about 3 days worth of information here, and then looking to take trades maybe later on midweek at some time back to the downside. Now, if this support level holds, then what we can be looking at on this pair is a potential push back to the upside, testing some of these resistance levels here around 87.58. That would be the ideal trading opportunity to see price come back into these levels here. With this bullish momentum, we could see some price push up into these levels. If that happens, then what I'll be looking for next week is to see how price starts to react in and around these levels here. Looking obviously for evidence, waiting for candle closes, and making sure we get those wicks so that we're able to scale down to our lower time frames to look for potential entries. Now, that being said, the range from the bottom to the top is about 210 pips. So what we're looking for here is a potential trading opportunity, looking for around 30 to 50 pips for a day trade. And if we manage to get in at some of these major levels here, the resistance or support again, and then potentially looking to swing this trade for a little bit longer. But for now, I think we can't overlook the fact that price is making a beautiful downtrend. We're making structural lower lows, lower highs, current lower high formation here, which is pretty visible in terms of trading opportunities, and the strong bounce off the bottoms of the support zone. So let's see how price comes back into this level here around 87.58 for a potential sell opportunity back to the downside. Of course, for buy opportunities, we're not going to be tricked into the market. We're just going to be waiting for clear breaks of previous structure levels, looking for a retest continuation and potential change in direction of this market. So for now, I'm sell biased on this market. Be looking for sell opportunities for this pair back to the downside, and we'll see what happens next week. Now, we know that Aussie dollar USD is 100% correlating with gold. So if we jump over to Aussie dollar USD, we can see the exact same structure here. In fact, what we'll do is we'll add gold to this as a comparison, and we'll just take a look at how the two line up side by side, okay? So we can see here we had a slight divergence here where price is pushing up, and we had a gap between this market. It's not major, to be honest with you. We can see that they're trading very, very similar. At this moment in time, the market was pushing out. We had a lower bias on Aussie dollar USD, on gold, and now we see this continuation to the upside, okay? With this continuation to the upside, we can see now we're in a consolidated market. The same features are happening here on gold with the stepping down, and the same with Aussie dollar USD. We have the structural high, lower, low, and we have a double top of this structure back into the support zone. Okay, so that being said, what I'll be looking for next week is pretty much the same thing. We have a more of a range here showing signs that price is being trapped potentially by bankers, creating what we'd like to call a consolidating ranging phase. Now, if price action starts to give us evidence that it's going to continue back to the upside, this is a great buy zone on the market. Okay, that will line up entirely with what we saw on gold, potentially looking for gold come back to the upside, the same as we may be looking for Aussie dollar USD. Now, in order to take potential buys on this market, I think if price doesn't come back down to the support zone around here at 69.83, then what we're going to be looking for is to see price break above this previous structural lower high to show evidence that the bulls are in the market, and then look for this continuation to the upside. However, if this double top formation is now forming for a breakout of this structure and this continued sell pressure in this market, the same with gold, then what we're looking for is for price to push back to the downside with a simple retest and a continuation, and that will be as simple as it is. We can see the bounce off this level has been pretty strong, so anybody holding buys off of this level, I think it's time to possibly go into break even. Just hold those trades and see what happens. If the market is going up, it's going up, and if it's not, it's not. The range from where price is now back to this resistance level is about 35 pips, so taking a trade with this big bullish candle here, it's not going to give you the best risk to reward ratio, so I wouldn't be rushing to any buys at the moment. And if price comes back to retest this level, what I want to see on this market is to see price pull away from this zone just for a period of time to show evidence that once price comes back to this level, the bulls are back in control of the market. There'll be a slight battle here, so a nice false breakout of this market with a candle close, and then of course we'll scale into our lower time frames looking for potential buy opportunities. For now, let's see how the market plays out. It is an area in the market what we'd like to call middle of the zones, and these are the key levels that I'll be looking for here around 70.56 and of course 69.83. And once price gives me more evidence, then I think we'll be able to get a conclusion of what we're doing with this structure. Okay, let's move on to USD CAD. Now this is very interesting. We have a market structure here where price was consolidating for a period of time, and then we see the false breakout of this structure and price breaking straight back into it. Now this can be drawn many ways, but if we just take an overall area on this market, trying to accommodate for as many of these wicks as possible, we can see price was ranging within this area on the market for some period of time. We was bouncing to the upside and bouncing to the downside, and after this big push to the upside, we expect this market to come back to the downside. Okay, we had a lot of buyers entering the market here around 32.92, which is obviously going to be a trap if the market is going to continue pushing to the downside. We see this breakout to the upside, which of course is going to induce more breakout traders for these buy opportunities, especially with this buy pressure and this sell pressure depleting to the top side. But what happened is after this breakout, and it's something that we saw similar to about 10 days ago in the market, where UJ done the exact same thing. We had the false breakout on UJ and the market started to rally into the downside. So what I'll be looking for on this pair is a continued sell bias consensus. Okay, we see price came to the upside. We've now formed a new resistance area in this market above previous structural highs. What we do see the market doing is breaking back into this consolidation zone, which we'll call this area here an accumulation phase in the market, or a distribution phase in the market, should I say, where price is collecting orders. And this is where banks are obviously going to be manipulating the market and confusing traders. Buyers, sellers, false breakouts, break back into the market. So what I'd like to see, if we're going to continue with this buy bias to the upside, then I'll just wait for a simple break of this previous structure high for evidence to show that buyers are in the market and a continuation to the upside. Overall, looking at this market structure and collating everything that we've just said, I think that we're going to see this market continue to push to the downside, and the range I'll be looking at is from this structure where price is at now back down to the structural support around 32.92. So checking the range from here to there is about 128 pips, which is absolutely beautiful. Only looking for about 30 to 50 pips for a day trade, and if price comes back to these levels here, potential swing trade back to the downside here. But for now, it's a nice range to play with. If price gives me evidence of a sell bias market, I'll be looking for the lower highs to be formed for the continuations to the downside, or potential new resistance formed, looking to sell this market within this range. Okay, So for now, that's my bias on USD CAD. The next pair we're looking at is pound yen. And again, this market is kind of consolidating within a range at the moment. Now, we can see this has come off the back of a strong push to the upside in the market. And when we're looking at this structure, we can see that the bulls were really in control. Then all of a sudden, we had this double top of this structure, and the market right now is starting to get confused. This is an area in the market that we call distribution again, where banks are starting to confuse retail traders into buying and selling these markets. Now, it doesn't mean it's a bad thing, but it does mean that we have to be careful of where we take these trades, and also need to be careful of false breakouts to the upside and downside. We can see price action is being respected, support zones are being respected to the downside, and we're also seeing resistance zones being respected to the upside. So what I really like to see on this market structure is for price to come back to this level here around 47.05 and look for key evidence, obviously scaling to our lower time frames, for price to show evidence that the bears are back in control of this market, pushing back to the downside. Any break to the upside I'm going to ignore, because I'm not about to be trapped into any buyers unless price starts to pull away from this area in the market, comes back to what was once a resistance zone and turns support at 47.05, looking for key evidence to the push to the upside. Now, that being said, any buy opportunities, we're going to be running into trouble around here, so we always have to be checking our range. Be careful of that. Me personally, what I'd like to see on this market structure is for price action to come back to this resistance level, show evidence that the bears are in control and they're about to power this market back to the downside and looking to ride this whole range. If I do get the evidence and I'm able to secure my trade at break even as soon as possible, then I'll be looking to take this whole move back to the downside, which is about 323 pips. That will be absolutely gorgeous. For any sell opportunities, to be honest with you, if price starts to make a new lower high of this structure, then what I'll be looking for is just for a simple low high of the structure and then a continuation back to the downside. Again, always checking my range from the from where I'm selling to the downside to make sure that there's enough room in terms of risk reward ratio and managing to get a safe stop loss on this pair. Until price breaks out of this structure to the up or downside, to be honest with you, I don't think there'll be any swing trading opportunities available at the moment. Anytime you take a swing, you want to take it from the major highs, major lows. This is a range-bound market that I believe is in a distribution phase at the moment. So it'll be very interesting to see how we break to the downside and start filling up some of this area down here. But for now, that's GJ. And this is one of the key areas I'll be looking for. And I guess this is going to be it for this pair. Moving on, we have pound Swiss franc. Now we can see the pound has had a strong move to the upside. Again, what we can see in this market is price is now coming to a very strong resistance zone around 34.02. What I'll be looking for in this pair is just to see how the pound starts to react next week to these major resistance zones, because we've had these strong pushes, and I know that was inflicted by news. We did have a short bias on this market for a very short period of time. There were a lot of traders in sales that managed to get around 100 pips. I'm hoping that you guys and ladies who take sells with GJ and the other pound pairs that get into some of these really big moves, well, we wouldn't call them big moves because it's part of the range of these pairs, but around 100 pips profit, that you're at least locking in some of those profits or going break even. However, we had this push to the downside and then this explosion to the upside on Friday. Now, to me, this is a very manipulative move. I don't see this continuing to push up for much longer. And if it does, then I won't be trapped into any buyers until price starts to come back to these levels after some time away from this previous resistance and then potential turning support at 34.02. So what I would like to see personally is this turn into a very strong double top of previous structural high, which we can see on 2 days of trying to push through this level. We failed to do so. If we see that there are orders in this level, then I'll wait for a breakout of this level, for the false breakout, the break back into this level, the attempt to break again, and then look to sell this market to the downside, okay? So we'll see how this plays out moving forward next week. I don't think there's much to go by here, to be honest with you. We know that this is a very strong support level on this market, but look where price is at the moment. Look at the average range of these candles. Look how pound Swiss franc moves. Sometimes extremely slow. Sometimes it does explode. So to see price come back to this level next week is probably a big ask. what I'm leading on to. If it does, then I'd definitely be looking for buys. Looking to the left, it was a major resistance zone on the market. When price broke through, it became turned major support. Very simple trading ideas here, and everybody knows support, resistance, and these are definitely some opportunities that surely you guys should have been taking advantage of if you had those alarms set. But for now, I think with this pair, we'll stick to our analysis and see what happens. The next pair we're looking at is Aussie dollar, New Zealand dollar. Now, we've had this strong push to the downside in with this market structure. To be honest with you, I am looking for continued sell bias on this market, back down to some of these strong resistance levels looking to the left. I think with the over consensus of this market, we've had this break to the upside around 0602, and price rejected it fairly majorly. Okay, bulls were trying to push up, making new highs of these previous levels in this market, and we can see we've closed around the same area here around 0586. Previous candle opened on Thursday with a push to the downside, and Friday closed with an indecision. So what I'd like to see next week, honestly, is to see this market structure continue to push to the downside, a simple retest of this structure and a continuation. And that's all I'll be looking for on Aussie dollar, New Zealand dollar. The next pair we're having a look at here is Swiss franc yen. Now, you can notice that price has been trickling down for some time. There were some amazing sell opportunities at these major structural highs here. And what I'd like to see is a completion of this market back to the downside. Now, if price comes and taps into this level, I think with previous price action, we can see it's a very strong support zone. And every time price has come to this level, has rejected it and pushed to the upside. So that being said, if we get a nice strong push into this level and not a trickling effect that we can see here, then I'd like to see first signs of rejection in and around these areas here. So a nice strong bearish candle, signs of rejection, a slight retest, scaling to lower time frames, and a potential continued buy back into these structural resistance levels here. Okay, now for buy opportunities, we obviously need to wait for evidence. That's candle closes, signs of rejection, and obviously then looking at lower time frames to see the behavioral patterns of what's happening and around this level. If this market continues with its sell bias, then it'll be very interesting to see how it breaks this level, a simple retest of this structure, and then a continuation to the downside. Okay, now I know looking to the left, this looks like a support zone on the market, which is fair enough to say. We can see price has been closing above these levels, so struggling to break in and around 1919. I don't really see this as a buy zone, to be honest with you. I'm always looking for the major areas on the market where we can see the wicks. It's safer to wait for price to come here with a stop loss below these structures than it is to buy here with a stop below these wicks, because what usually happens, you get the stop hunt and then you'll see the rally to the upside. If price starts to break above this level next week and starts to create new structural highs, higher lows, then potential buys will be on the radar, but I don't think that will happen until later on in the week back to the upside. So for now, I'm still sell bias on Swiss franc yen, and this is what I'll be looking for. The next pair we'll look at is Euro Pound. Now, we can see Friday closed with a very strong bearish candle to the downside. Again, we can see the reverse on this on GJ. We know that the pound has obviously a lot of strength in it at the moment. There's a lot of money going into it. And obviously, we can see now this has been evident on Friday. Now, again, I still really believe that this is a strong manipulation candle to the downside. This is inflicted by news and obviously overall opinions of seeing this price action push to the downside. I think, to be honest with you, I think once price starts to tap into these levels here, we're going to start to see rejections. Even without looking to the left, I think when you look at this market structure, we had the triple top of this resistance zone here, and prices continue to rally down. You don't see any green candles here. We just see red, 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 red. I think at this stage, if this market is going to continue to push to the downside, we're going to have some sort of exhaustion on this market. And if that being said, price starts to pull back, show signs of rejection, leaving wicks behind, tapping into some of these resistance zones here, then we could potentially look to short this market back to the support zone at 84.82. However, if this doesn't happen and price continues to smash into this level as of next week, then I'll be looking for the first signs to buy this market. To be selling this market, I don't think you could be trapped into it unless we get a clear break, retest, continuation of this structure. The pound pairs are a bit all over the place at the moment, bit volatile. So I'm not really a fan of them, to be honest with you. The only setup that I'm going to be really looking for is the pound yen setup. That being said, if I am expecting the pound yen to find resistance in and around previous resistance zones and looking to push back to the downside, which is about 300 odd pips, then I would like to see the exact same thing happen here in euro pound as well. I would like to see price come back into the support zone. I'll use this pair as a pair for confluence and look for signs of rejection here to show weakness in the pound, and then see if we can rally this market back to the upside. For now, everything lies on the support zone 84.82, and I'd like to see what happens when price gets there. As I said, if it does happen and we get this pullback with slight rejections, then I'll be viewing this market as an exhaustion phase, and then I'll be looking to continue this market sell bias back down to the support zone only. So that's euro pound. The next pair we'll have a look at is euro New Zealand dollar. Now, what we can see in this market is a potential range bound market starting to form. We have this strong push to the upside, and looking to the left, price hasn't come into around these areas since January. Once price came back into this level, we can see the resistance zone held, and price immediately shot back to the downside, tapping into some strong previous resistance zones now turned support. Price came back into in and around these levels again, showing signs of rejection back to the downside. We know that there's strong bearish pressure in the market, so what we'll be looking for is to see how price starts to act in and around these levels here. If this daily candle starts to close with rejection, then we could potentially see a higher low of this structure. Then we'll be looking to take this market back to the upside with a retest and a continuation. If that doesn't happen, then I'll simply be waiting for price to continue its push back to the downside, looking for support level around here, or a potential reversal in this market with this double top formation, and then looking for this break, lower high formation, and then a continuation to the downside. Okay, so just to clear this up, what I'll be looking for on this pair is how price starts to push back down to these support zones here. See how price starts to react in and around this potentially new formed support, higher low formation, continuation, retest to the upside. If price comes back into this level here, I will not be looking to short it unless I get major signs that price is rejecting it. I will question why price is not able to push to the downside once it's tapped back into this area, because every time price has tapped into it, we have had a sell-off. Here we had a sell-off. Here, if we don't have this sell-off, then I'm going to start to wonder, are the bulls stepping into this market? And are they looking to break these levels to the upside? So for now, this doesn't become a sell zone for me. Support, I'll be looking for price to come back to this level. Again, with the overall formation of these candles and their ranges, I don't think we'll be looking to be buying off this market until maybe mid next week sometime. So we'll wait, obviously, patiently for that to happen. With this pair, I think we've exhausted all of its possibilities in terms of market structure. Let's be wary that this can do this, which is not a bad thing. But after this happens, this becomes a distribution phase in the market, and we'll be potentially looking to short this market back to the downside eventually when price gives us evidence. Okay, so for now, that's euro New Zealand dollar. The final pair we'll look at is euro USD. You can see that this pair has been trending very beautifully to the downside. Again, last week we formed a new lower high of this structure, or a double top of the previous lower high, should I say. As soon as price rallied into this area, we can see major sell-off, and now price is attempting to push back to the upside with another sell-off. Now, what I'd like to see with this market is for price to continue this phase back to the upside, tapping back into these levels, making a triple top, and seeing price come back into these support zones here. Okay. At the moment, the way we've drawn our structure, you can see price is trading in the middle of nowhere. So I won't be looking for any opportunities while price is here. Waiting for price to come back to these major levels around 12.64. And of course, see how price starts to react down here around these levels, which is 11.21. Would I buy for this market? Well, no, not really, to be honest with you. The overall consensus of this market is down, trend is down, structure is down, everything looks down to me. So I don't really want to be buying off of the support level. I'm not interested if I'm the first person to buy or get in with a sniper entry. For buying opportunities with this much sell pressure, I'll be looking for price to come back into these levels for a tap, then I'll be looking for price to break these previous structural levels here, come back down to make a new higher low formation, and then I could potentially look to take this market to the upside. The way my mind works is if this market is going up, it's going up. So why not wait patiently for evidence as opposed to being the first person that gets a buy in and around these levels. Now, if you do look for buys around these levels, then I will tell you now the best thing to do is wait for price to tap into the major areas on this market, which is wicks, wicks, wicks. We then want to make sure we have a stop loss below market structure, and you want to make sure that your risk reward ratio is always available inside of the range of the market that you're trading in. If you start to have a stop loss that's big like this, and then you're looking to take a 1-to-3 risk reward ratio with the market structure like this, then you're causing yourself more trouble, because what you're expecting price to do is to respect the support zone, to break through previous structural highs, to hit your take profit. It becomes unreasonable. So just a little tip there, make sure any trade that you take, you have a good enough risk reward ratio inside the range that the market is trading in at its moment in time. So for now, enjoy the analysis, have a great trading week. Make sure you're marking up your charts, plan your trade your plan, and everybody have a great trading week. Take care.